Welcome to another trade recap. Today we had I'd say a solid trade for today. We didn't hit all take profits, we only hit one take profit and then the rest got stopped out at break even. But I'm happy with that. Profit is profit, so this would make up for tomorrow's loss, which I am happy about. Let me start off by going over my confluences on the higher time frame and explaining what I was looking at coming into the market, right? So coming right off the bat, coming into the market, right? On the 4 hour time frame, we can see this huge sell off from yesterday's FOMC news. So I just marked out these 4 hour highs, 4 hour lows. That was it for the 4 hour. 1 hour. The reason I didn't mark this 4 hour fair value is because we already mitigated it, right? So I wanted to scale in further to get a more precise entry, or more precise order block, fair value gap. Sorry, excuse me, Jesus. So again, coming into the market, I didn't mark these 1 hour highs just because they were so high above. Right, first we had these imbalance, right, that I marked out. 1 hour high right here, 1 hour high, 1 hour low down here, and then this hourly imbalance, and these 4 hour lows, right. That was it for my high time frame confluences, right. From there, scale down to the 5 minute. What am I looking at? I'm watching price. Watch price come and sweep this liquidity right here. And now, after it was a sweep, we're waiting for a candle, a bearish candle closure. Because why? Because we swept high time frame liquidity. From there on, this was at market open 9:30, 9:35. Scale down to 1 minute now, 9:35, right around right here. This candle. That's when I started looking into the market. We had this huge fair value gap, right here, imbalance created. However, we had a candle closure out of it body wise, so I disregarded it. However, I seen that we came and tapped into this order block right here, right? This is your order block, last candle that pushed up and swept liquidity, right? From the opposite candle, where we were. So in this case, it was a bullish candle. We're looking at order block that came and swept liquidity. That's your order block. Tapped into it, respected it, good push out of it. At this point, I'm just looking for a break of structure. I kind of entered too early, because again, I thought with this candle right here, it was gonna close out here, but because of how choppy price was today, how as you can see, look at all this, yeah, like how choppy price was, like I entered and then it literally closed right up here. So but however, I put my stops all the way up here just because this is where my trade would be invalidated, right? Because I'm taking it off of this order block. Yes, the stop was super super there was a lot of room, right? So I had to obviously de-risk the amount I put on this trade, due to how much space it had, right, to really move around. First take profit, right, initially was this imbalance on the 1 hour, the beginning of this imbalance. Second take profit was the end of that imbalance, and third and final take profit was going to be these 4 hour and hourly lows. That was pretty much it. I mean, I could have things I could have done better. I could have put, I guess, one of my take profits right here, second take profit right here, third take profit right there, right? So I would have got two of my take profits hit out of the three instead of just one, right? However, that wasn't the case. I felt like this wasn't the risk to reward on this was kind of just trash. So I wanted this beginning of this imbalance, right? Because as soon as this was going down, I was also trailing my stops, right? So at the previous highs that it was creating. So as soon as I made this high, it's right here. As soon as I made these little highs right here, right? So I was literally like trailing my stop because of due to how high or how much room there was of drawdown that I left. There was a lot of drawdown room, so I was trailing it. course, obviously de-risked, managed my risk properly due to how much drawdown there was, or I had given it. um, but yeah, um, overall, I guess a solid trade for a day. It's a day after FOMC. We did have existing home sales at 10 come out. Prior to that was the final GDP and unemployment claims at 8:30. Uh, but yeah, um, that's what I took my trade off of. That's what I was looking at the market coming into it. Obviously, not every trade is going to be an A plus setup. In this case, is a perfect example of it. um, um, Entry confluences. Before I finish this, tap into the order block, cross of the EMAs, and then a break of structure. We got it over here. Finally, but if I would have entered over there, that risk reward would have been so even worse. Which I'm kind of okay with this. This was a risky entry, and I got psyched out or like kind of fooled on the entry because I literally, like I said, it broke structure for like a split second and then just like bounced right back. Literally like last second. So, um, but yeah, again, with that being said, guys, thank y'all for tuning in. Hope you're enjoying the videos, and I hope y'all learning from these videos. If there's any questions you guys have, any questions about my strategy, I'm happy to answer the questions. Happy to help you out. But with that being said, guys, catch you on the next trade recap. Peace.